We're moving through the late morning on Wall Street, and it's been a quietly optimistic tape so far, with macro sentiment doing most of the heavy lifting. I'm Grant Mercer, and this is Storm Stock Solutions, here to bring a little clarity through the chaos of today's markets. The big new driver hitting the screens this hour is a fresh piece from MarketWatch on fundstress Tom Lee, one of the street's better-known bulls, is out saying the Fed could help power roughly a 10% gain for stocks in 2026. Now, that's a long runway from where we sit today, but the key for traders is the narrative. If the market keeps believing the Fed is shifting from a headwind to a tailwind, dips can stay shallow and risk appetite can stay alive, even on slower news. Days like this. On the economic front, we got weekly jobless claims after the Thanksgiving holiday. According to Jeffrey Bartash's reporting at MarketWatch, claims jumped to a 3-month high, but the move looks exaggerated by holiday timing, and there's still little evidence of a real pickup in layoff. For equity desks, that's Goldilocks light. Enough softening to keep the Fed patient, not enough to scream recession. That backdrop is helping keep the tone constructive under the surface. In terms of stock-specific action, one headline that just dropped: Disney is investing $1 billion in OpenAI and licensing its characters for use on the Sora platform. That's a classic media meet shy story. Traders are going to be watching how legacy content owners try to monetize AI tools without diluting their brands. It also keeps the AI trade front and center, but this time with an entertainment twist rather than just chips and cloud. We're also seeing some interesting under-the-radar stories that could matter more as the day develops. One is housing and consumer finance. MarketWatch has a critical take on the push toward ultra-long, 50-year mortgages, arguing they don't really solve affordability and could even hurt retirement outcomes. That doesn't move a ticker immediately, but it feeds into the bigger debate about how stretched the U.S. consumer is and what future household balance sheets look like for banks, home builders, and retirement planners. Another sleeper worth flagging is in the speculative and policy-sensitive corner of the market. Coverage of the Winklevoss twins and Gemini space station's rough IPO, followed by a political assist and a relief rally, is a reminder of just how headline-driven some of these high-beta names can be. For traders, that's the kind of pocket where volatility can spike out of nowhere on a single tweet or comment. And in healthcare, Eli Lilly is back in the news with more data on its latest weight loss triple G drug. As highlighted by MarketWatch, patients not only lost close to 29% of their body weight in a phase 3 trial, but also saw reduced knee osteoarthritis pain. That keeps the obesity drug theme firmly in play. It's a multi-year story that continues to ripple across everything from pharma to medtech to even food and beverage names. From here into the next hour, I'll be watching whether this bullish Fed narrative from Tom Lee translates into a broader bid for cyclicals and growth, or if traders stay selective and stock, i.e. specific. I'll also keep an eye on follow-through around that Disney OpenAI deal and any secondary moves in adjacent media and tech. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.